Elon Musk is confident that Tesla's energy storage division will eventually be just as large as the company's automotive operations, which are already bringing in tens of billions of dollars. Yet, most of the analysts on Wall Street have completely disregarded battery storage and only focus on sales of vehicles when they build their financial models. Because energy storage is currently a small fraction of Tesla's revenue compared to the car business, it's currently treated as a rounding error and is often overlooked. However, based on Tesla's ambitious goals, it appears that standalone battery storage could be one of the most underestimated businesses within Tesla, consisting of massive growth potential over the next decade. Tesla plans to sell 20 million vehicles annually by 2030. This will consist of low-cost compact cars and robotaxis, as well as much larger, more expensive vehicles at higher prices, including semi-trucks. As a rough estimate, and if we believe that Tesla will achieve their goals, perhaps we can assume that on average, a vehicle sells for between $20,000 to $30,000. Again, this is an average, and there will be far more smaller, cheaper vehicles on the road than larger ones. At 20 million cars, that could generate revenue of $500 billion per year at the midpoint. While the estimated number may fluctuate, what's actually important to note is that last year, Tesla's automotive division made $27 billion in revenue. So by the end of the decade, even as vehicle prices and costs come down over time, since today Tesla's average vehicle price is closer to $50,000, Tesla's automotive division only could be 15 to 20 times larger than it is today. And at the present time, cars also make up about 90% of Tesla's revenue. This could make the automotive business colossal, not just compared to where Tesla is today, but this puts it on par with today's largest companies, including Walmart, the largest company in the world by revenue generation at over $550 billion per year. If Tesla can maintain its current mid-20% gross margins, they could be considerably more profitable. For automotive alone, Tesla is factoring in 100 times growth for the industry in order to upgrade the entire global fleet to electric. That will take 10 terawatt hours of production capacity, according to Elon Musk, and Tesla plans to play a key role to be the driving force of this trend. And while Tesla may not achieve this 20 million vehicle goal, today they're thinking long-term and devising a plan to get there by taking steps to ramp up production of their new 4680 battery cell. And Tesla believes that there's enough demand worldwide to satisfy this electric vehicle supply that they plan on bringing to market. But what about batteries and energy storage? At Tesla's Battery Day event last year, they also showed that battery storage globally is starting off a base that's 15 times smaller than automotive. Yet, the global market size for energy applications is actually similar in size to the car market. Tesla plans to replace non-renewable sources, fossil fuel heating, and aid future expansion of the grid with battery storage systems. Of course, these may be coupled with energy generation systems such as solar panels, which Tesla also produces and installs in a separate line of business. But what's interesting is the 10 terawatt hour forecast, the same as automotive, which is a measure for battery storage only to help support the transition to these next generation systems prioritizing sustainability. Because storage is coming off a smaller base, Tesla is expecting the industry to grow by 1,600 times. However, Tesla is already a leader in battery deployments, even though it may not look like much. In 2020, Tesla deployed 3 gigawatt hours worth of storage systems for the year. According to Tesla's latest impact report, by 2030, Tesla is looking to increase their own output to 1.5 terawatt hours, or 500 times the size of their current battery storage operations. The question is, which products will be the key enablers of this growth, and how much revenue could they bring in just from the energy storage business alone? And by the way, stop using Yahoo Finance, stop using Google Finance, and check out our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Tesla has multiple battery storage products that will eventually scale to rival the size of the automotive business. Powerwall Plus is Tesla's popular residential home battery, providing backup power and energy storage to run homes during outages or on peak hours. These may look small, but a Powerwall weighs 250 pounds, and the Powerwall Plus ranks in at 343 pounds. Up to 10 Powerwalls can be stacked together to conform to larger homes. Each Powerwall has 13.5 kilowatt hours of storage capacity, and it's noteworthy that this is about 5.5 times smaller than a typical Model 3 battery pack. It's a compelling product, and even more so in areas with higher electricity rates or with large differences between time of use or on-peak and off-peak rates, where consumers can save money by charging off-peak when electricity is cheap and then releasing that energy when electricity rates are at their highest. But peace of mind and protection from power failures is one of the main benefits of this product. Now, demand for Powerwall is off the charts, and Tesla can keep up on the supply side. Recently, they've had to combine the Powerwall Plus with their solar offerings in order to limit the number of buyers and make it a worthwhile sale in the bundled format. A single Powerwall alone costs $10,500, which is actually a similar dollar per kilowatt hour price as compared to a Tesla vehicle. As mentioned, about 5.5 Powerwalls is 75 kilowatt hours, the same as a Model 3, and it would cost $57,000, which is the equivalent of a higher-end Model 3. And this hints at higher margins for Powerwall. One of the main differences is that Tesla would need to ship and install many more of these devices in order to make a meaningful income. That's to say that although Powerwall appears to be a mass-market device, there are millions of homes to sell into, and about 95,000 Powerwalls is $1 billion of revenue. But relatively speaking, each Powerwall doesn't actually contain that many battery cells. So it's really a low-volume product in terms of energy capacity or the kilowatt hours being packaged together and sold. Tesla needs to sell tens of thousands of these in order to make a meaningful profit. This is still an excellent business, but nevertheless, Tesla has some better options for more economical battery products. Tesla began its foray into the commercial energy market with its Powerpack product. This utility-scale battery contains 16 battery pods, akin to modules in a Tesla vehicle battery pack, and these pods can be easily replaced or swapped out if needed. As with the Powerwall, the Powerpack has a liquid cooling system that was actually adapted from the Model S cooling system design to keep it operating efficiently, and they can be stacked just like the Powerwall. Powerpack's capacity is 232 kilowatt hours, which is the equivalent of 17 Powerwalls, except that Powerpack weighs a little bit more than 17 Powerwalls at 4,800 pounds, and its corresponding inverter weighs almost 2,500 pounds versus about 90 pounds on the Powerwall Plus. Now, the Powerpack is priced at $172,000, which is surprisingly close to the price of 17 Powerwalls, so its dollars per kilowatt hour ratio is about the same, marginally cheaper. However, last year, the Powerpack saw a decline in sales due to Tesla's next-generation battery pack. It's still available, but it has been taken off the Tesla website menu, as Tesla now has a more efficient offering, the Megapack. The Megapack is basically a row of power packs. However, Tesla's new compact design calls for significant cost and efficiency savings. First off, the Megapack, despite its size, is fully assembled and tested in Tesla's factory and gets delivered as one massive unit. Because of this, there's no assembly, and utilities basically just need to plug it in, or rather connect it to their wiring setup. Currently, the Nevada Gigafactory is responsible for producing this and Tesla's other battery products. In addition to being a solid block of battery modules weighing 51,000 pounds, the Megapack has a built-in thermal management system, bi-directional inverters, and a controller for the device. As with all of Tesla's battery storage products, special batteries are not needed as compared to vehicles, so Tesla can put in much cheaper lithium iron phosphate battery cells, which would normally have less range for a vehicle, but that's not relevant for a battery pack and will have advantages in cost, longevity, and safety. Now, Megapack is designed for ultra-large scale utilities and can be combined with other Megapacks for gigawatt-hour capacity. Utilities can run Tesla's custom AutoBidder software in order to trade energy using their Megapack assets. This efficient system drastically cuts costs for Tesla customers, which is why this product is extremely popular and Tesla has a large backlog of sales. Megapack is sold out through the end of 2022. The importance of Megapack cannot be understated, as it's tailored to smoothing out the intermittent utility-level energy generation pattern of renewables such as wind and solar that don't generate energy consistently throughout the day. It can be used for deploying microgrids that are completely disconnected from the main grid, and Megapack can step in at the microsecond level to regulate voltages and frequencies and maintain grid stability. Compared to gas-powered peaker plants, which is the true competition, the Megapack is lightning fast at doing this. Tesla's most recent Megapack improvements allow for 10 times faster install. It requires 40% less physical space and has 10 times fewer parts than any competing system on the market. Now, Tesla has plenty of competitors in the utility scale space, including BYD, LG Chem, and startups such as Northvolt. The market itself is large enough for all of these players, and Tesla's ambitions will only get them to a 15% market share by 2030. Tesla is bringing scale to the table by building fixed-size battery packs in their factory, allowing for rapid development and pre-assembly. And of course, the Gigafactory itself is already designed to output battery cells at high speeds. Competitors with custom solutions will have difficulty reaching scale, and many competing websites make it difficult to find pricing and add extra steps of contacting the company for more details, whereas Tesla's website is simpler, allowing for ordering within minutes. Tesla's experience with shipping and logistics also enables them to have the necessary resources to reach a wide scale. Tesla even states in their most recent impact report that the beauty of selling commercial storage systems such as the Megapack is that their commercial customers make their purchase decisions almost purely on economic decisions. And so Tesla will likely have a stream of customers lined up for years and years, but even at the present time, they're drowning in demand, a high-quality problem. Now, the Tesla Megapack has a capacity of 3 megawatt hours, which makes it equivalent to about 13 power packs. But Tesla appears to be pushing the Megapack much more than the Power Pack. A single Megapack can be purchased for $1.2 million. This may seem like a lot, but it's actually significantly better in dollars per kilowatt hour than either the Powerwall or the Power Pack. Furthermore, if customers order multiple Megapacks, the price per Megapack tends to decrease towards $1 million apiece. Tesla also throws in a $4,000 to $6,000 annual maintenance fee per Megapack that increases at 2% per year, making this into a long-term services business as well. But looking at the raw Megapack dollars per kilowatt hour itself, compared to the Powerwall and Powerpack, the Megapack is more economical for bulk orders by more than 56%. This is how Tesla can achieve insane levels of demand for what many can't wrap their heads around and believe it to be just a simple battery storage unit. Returning to Tesla's energy division's goals, while they deployed 3 gigawatt hours in 2020, they plan on increasing that number to 1,500 gigawatts by 2030. Megapack and its future successors will likely make up the bulk of this, given how large and densely packed the device is with batteries. It's truly high volume in terms of the battery energy sold and allows for scaling massively through large utilities and other types of customers. As a rough estimate, if all 1,500 gigawatts came from the Megapack, that would mean about 500,000 Megapacks would need to be sold annually in 2030. Given today's bulk level pricing of $1 million per unit, that would generate $500 billion of revenue for Tesla. Alternatively, if the mix shifts towards Powerwalls, these are simply higher revenue per kilowatt hour products for Tesla, which would further increase revenue. Now, even if the price of Tesla's products come down long term as Tesla continues to remove costs and battery cell prices become more affordable, Tesla is looking at not just billions or tens of billions, but potentially hundreds of billions of dollars coming from battery storage units alone. This puts the energy storage division on par with the automotive business in terms of its long-term value, which is why Elon Musk views them as similar in size, not just from an energy or watt-hour perspective, but also on bringing in perplexing sums of income for Tesla. So do you think the energy business could eventually be the same size as automotive? And let me know in the comments what other businesses Tesla can get into that you think could rival the size of their vehicle business over the next decade. Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.